please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Story that we're tracking this morning. President Donald Trump decides to pull US from the Iran nuclear deal. The landmark 2015 nuclear agreement lifted sanctions on Iran, and in return, Iran had accepted to limit its nuclear program. Now, exiting the deal fulfills one of Trump's campaign promises, and the administration will restore all sanctions on Iran suspended under that particular deal.
Okay, strong statements coming in there from President Trump. Meanwhile, the Iranian president responded by saying that Iran will remain in the nuclear deal without Washington. He added that Trump has a history of undermining international treaties, calling the decision illegal and illegitimate.
Tonight we witnessed an important historic experience. The same thing that we have said and repeated for 40 years has now happened. Iran is a country that is loyal to its commitments, and the US is a country that never sticks to its commitments.
Okay, well, we have Manisha Gupta joining in to tell us what the impact of Trump's decision on the oil markets would be. Well, Manisha, morning, we discussed this briefly yesterday, that this seems to be the worst-case scenario playing out.
Oh, well, yes. And, yesterday at one point in time, ahead of the deal, while the markets were really confused on what really was happening, we did see the crude oil prices fall 4% at one point in time. But the closing has been much higher than that, nearly 2% on the higher side from the kind of lows we saw. But yes, Trump has clearly torn apart the Iran deal. And not only is it going to reimpose economic sanctions, but of the highest level, as it says, but he also said that this would be done in the next couple of months. So that means while you will see the knee-jerk reaction, markets will now stand by to wait for the details on what kind of sanctions, how are the allies going to be treated, and what really can happen in the next couple of months. So the uncertainty in that sense is stretched for the next 2 months as well. Apart from that, if you look at the numbers, well, Iran produces 3.8 million barrels per day and has been exporting 2.5 million barrels per day. But the expectation is that with the sanctions coming in, it could be anywhere between 2 lakh to 8 lakh barrels per day of an impact that the Iran can see. Now, Iran, while of course exports major of its share to Asia and Europe, Europe is one of the signatories, so that really could come under pressure. But as far as China and India are concerned, not too much of an impact is expected from these sanctions coming in. Of course, India is and China are expected to keep their stand on. China, in fact, has imported record high crude in the month of April at 9.64 million barrels per day, which is 14.5% higher year-on-year basis. So we are looking at very strong demand in the international markets, especially from Asia, and that will keep the crude oil prices supported. The reason that you have seen the profit taking come in is because you have the speculative long positions at record highs. So there is some money that has been taken off the table. But at every dip, you will see the crude oil prices seeing some support. If you look at the volumes in last couple of days, then those have been the highest since November 2016. So the interest in the crude oil prices and the movement has been really on the higher side. Also supportive for the crude oil prices is the fact that the OPEC output has declined for a third straight month to a one-year low in the month of April. So everywhere that you look, the fundamentals are very strong, and that is what the markets are going to get into in trading today.
All right, Manisha, hang on, stay on with us. We have Vandana Hari of Vanda Insights who joins us now on the phone line. Hi, Vandana, very good morning to you. The worst-case scenario played out. Lower supply of crude, of oil in the markets is definitely going to take crude oil prices higher. Your analysis of the same, and where do you see Brent crude prices heading?
Hi, good morning. So definitely one of the worst case scenarios for that was being contemplated for this week. I think a bigger question for the oil markets now is going to be what is the scenario over the next 3 months, 6 months, or even a longer term.
Yes.
So as we learned overnight, the European allies in the deal have remained quite steadfast in their support for the agreement. However, questions are being asked, does it really have any significance if the Europeans and the Russians and the Chinese, the other signatories to the deal, say that we remain committed? Because U.S. sanctions against Iran could still do a lot of damage, and they could actually prevent companies and governments in these other countries which are standing by Iran to not do business with Iran. So we had there was a White House statement after Trump's announcement that said that there will be sanctions imposed against Iran's energy and petrochemical sectors. Now, that is going to has the potential to deliver a severe body blow to Iran's general economy and finance.
Okay. Vandana, just taking that point forward, currently we have Brent, which is bounced back to around $76 per barrel. What is your sense in terms of at least a near-term movement for Brent crude, considering that the European parties haven't moved on this particular deal, but only the US has?
So I know in the run-up to this May 12th deadline, there has been a lot of speculation in the market, especially the oil market in events of major spikes or declines tends to think in terms of round numbers, and 80 has been discussed quite a bit. I see little chance of it actually hitting that. We are sitting just over between 76, around 76.65 this morning for Brent. The reason I say that is that, yes, while now there is a great deal of uncertainty and Iran, loss of Iran crude exports is being factored in, it's going to be very difficult for the market to actually pin down a volume. Not just for the next few weeks, I would say for the next few months, it's going to be hard. So I think the market moves will be cautious, especially when it comes to going long. And of course, I think some of the other factors that are guiding fundamentals are going to start coming into play. As you mentioned earlier, Chinese crude imports have been record high again in April. So some of these things will start to come into picture. All of them had been essentially brushed aside in this whole drama around the Iran deal. I don't see a continued run-up from here until the situation starts becoming clear as to the impact in the physical markets.
Okay, well, we have Manisha, commodities editor, joining in for this discussion as well. Manisha, go ahead.
Thanks so much, Well, yes, Vandana, while of course we have seen huge volatility in last 24 hours, and that perhaps is going to be the case for next couple of months as well. But would you say that this is a very difficult market to go short right now with the kind of scenario that we are in? Do you see long positions being added, and do you see a 78 or a 80 now coming in sooner, or would you see a more of a consolidation kind of a mode?
Great question, Manisha. It would be take a very brave soul to go short right now. However, I think going long is also going to be cautious. It will probably be a little bit measured. I think today, tomorrow, the next couple of days will factor in whatever the market can factor in for the time being. But probably we're going to be a little bit range bound, though definitely more long than short for now.
A very last quick question from me. And what impact do you see on Asia from U.S. pulling out of the Iran deal? What impact would you see for India coming in? Because as of now, we understand that it isn't going to be a very big impact, and India will continue to be a buyer, perhaps.
Well, the Asian buyers have already been hit in a big way. And if you talk about India, just the cost of the crude imports, nearly 87% of the crude that is processed in India is imported. So the cost has gone up. The rupee has been depreciating immensely in the last few weeks. So in terms of rupees per barrel that the Indian refiners are paying, crude is already more than well above $80 a barrel. So there is an impact, definitely. There could be other impact in terms of the U.S. pressuring India through the government, the Indian oil companies, the refiners, to reduce imports from Iran, which is what happened the last time around. And not just India, the other major Asian buyers of Iranian crude, China, Japan, and Korea could also come under similar pressure. I do think, however, it will take a few weeks at least for the U.S. to start to put these things into motion, and for the markets to be able to evaluate what exactly might happen to Iran's export volumes.
Okay, all right. Thanks so much, Vandana, as well as Manisha, for joining in this morning and running us through those details. It's going to be quite interesting. Brent crude price is currently at around $76.50 per barrel. But let's get back to the equity markets now. Asian stocks, they are trading more or less mixed in early trade today. That's following President Donald Trump's announcement that the US would pull out of the Iran nuclear deal. And that's what's led a bit of, some nervousness in the markets. You have the Nikkei that's down close to around 0.4%. I think that's moved to the low point of the day, actually. So keep an eye out on that market. Also keep an eye out on the yen, because the yen is gradually moving to around that 110 odd mark. Now, for the Japanese economy, it'll be good if it moves to around 100, 110, 110 and a half. That's because, in fact, it's an export-oriented economy, so good news there. The Kospi was trading more or less flattish. In fact, it was trading in the green a short while back. Now it's moved into the red. But I think the Taiwanese index, that's one that's doing pretty well this morning. It opened up well in the green, and in fact, it's still holding with a gain of around 0.4%. Coming to our own markets, what are the indications? Well, the SGX Nifty, it doesn't get it right very often nowadays, but it's indicating a cut of around 35 to around 40 points.
Okay, well now let's tell you about Wall Street. Stocks closed little changed on Tuesday. This is after President Donald Trump announced he was withdrawing the US from the Iran nuclear deal signed 3 years ago. The Dow and the Nasdaq eked out minor gains, while the S&P 500 closed just below break-even. CNBC's Hampton Pearson gets us a wrap of all what took place on Wall Street.
For CNBC TV18, I'm Hampton Pearson. U.S. markets finishing the session flat. Defense contractors among the biggest winners today. Shares of Northrop Grumman, Lockheed Martin, and Raytheon all spiking following President Trump's announcements that the U.S. is withdrawing from the 2015 Iran nuclear deal and plans to restore sanctions on that regime. Oil prices also seeing some choppy trading action on that news, ultimately falling more than 1%. Meanwhile, U.S. job openings jumped to a record high in March. Job openings increased by 472,000 to a seasonally adjusted 6.6 million. That's according to the Labor Department. That's the highest reading since December of 2000. And sources tell CNBC that NBC parent Comcast is trying to pull together the resources for an all-cash bid for most of 21st Century Fox's assets. That is, if the U.S. government approves AT&T's purchase of Time Warner. Comcast shares slipped 5% on that news of the total $60 billion bid, which would top Disney's offer for Fox of $52 billion. That's the action from the U.S. markets. Back to you in Mumbai.
Okay, then turning attention to the European markets. Well, the frontliners, they closed mixed. The FTSE closed almost unchanged. The German DAX as well as the French CAC, both of them ended with some losses of around 0.2%. But the Italian equity investors, they were the big losers as uncertainty over the country's future government. That's what loomed out there, and that's why, in fact, that market was volatile. It ended with a cut of around 1.5%. And in fact, that was a relative underperformer because the Irish index as well did end with a gain of around 1.2%.
Yesterday in trade, the Nifty consolidated in a range. So eventually, the Nifty ended flat with a positive bias. The Sensex ended with just an 8-point gain. The mid-cap slightly underperformed, ending 29 points in the red. What stood out were the banks, which were star performers, led by ICICI Bank. Sonia joins in this morning to highlight all the cues for this morning's trade. Sonia, hi.
Hi, Ekta. Good morning. You know, as you pointed out, it was really the banks that have now become the star of the market. There was big delivery-based buying that we saw in a lot of the banks like ICICI Bank, Axis, etc. And yesterday as well, those were the stocks that led from the front. Although the market consolidated yesterday, it seems like the bulls continue to have a firm grip on the market. We saw some good numbers come in from the domestic institutions in terms of buying. They bought almost 950 crores in the cash markets yesterday. The selling from FIs has reduced as well. So FIs net sold less than 100 crores in the cash markets yesterday, and there was also big buying coming in from FIs in the F&O market to the tune of almost 1,400 odd crores. As I said, it was names like ICICI Bank, SBI, Axis Bank, and even from the IT space, TCS that led from the front. So both the leaders of the market, IT and banks, have now started to perform. You guys have been talking about the global cues. Donald Trump has finally exited that 2015 Iran nuclear deal. He has said for now that he will restore sanctions on Iran. However, the fall in crude, there was, of course, an initial knee-jerk reaction, but now crude is largely flat. It continues to trade above $75 a barrel. A lot of people believe that, the heavy sanctions will not be restored, and this will be one of those half-baked measures that Donald Trump will continue continue to, progress with. The US markets too ended absolutely flat post the exit of the nuclear deal. For our own markets, though, it seems like the bias is still on the upside, with participation coming in from banks and IT.
Okay, all right. Sonia, crude prices have moved higher. Some of these aviation stocks could be under some pressure, I'm guessing. What are the stocks we focus on?
There are plenty to look at this morning, Nigel. As I said, there was a lot of delivery-based buying in banks. 1,100 crores of delivery-based buying just in ICICI Bank yesterday. There was 400 crores of delivery-based buying in Axis Bank. Today is a heavy day in terms of numbers. You have Eicher Motors and GSPL from the larger ones. Then you have Federal Bank, Arvind, Parag Milk, just a couple of companies coming out with their numbers today. In terms of earnings reactions, Whirlpool came out with a decent set of numbers. Revenue growth of 24%. Profit growth of 23-odd%. ABB was also not too bad. Revenue growth of almost 17.5%. Profit growth of 14%. Spark was, an unimpressive lot. Profit of 2.5 crores this time around is what they posted. Sadbhav Infra revenues almost doubled. The EBITDA went up about 25%. Blue Dart, the profit was up almost 40%. The revenues went up about 6-odd% or so. A couple of others, Mahindra Holidays, decent set of numbers. The margins have improved for the company. Syntex, the margins have gone up, but the revenues have actually fallen about 6.5-odd%. But the stock to watch today, once again, will be Jubilant FoodWorks. A lot of brokerages have raised their target prices after the earnings and the earnings conference call coming in, and that stellar same-store sales growth number yesterday. The management says that they will focus on getting higher sales from existing stores. Kotak has raised their target price to 3,000 on the stock. Let's see how that one moves today.
Okay, well, Sonia, since you're with us, Eicher Motors, you mentioned that it's coming out with numbers today. What's the expectation?
Well, the expectation is that Eicher Motors will deliver a good set of numbers. This quarter was very good both for Royal Enfield and for the commercial vehicle segment. In fact, if you look at just the volume numbers, the Royal Enfield volumes went up almost 28% this time around. You had, big bump up coming in terms of the growth, percentage growth. So this time was a growth of almost about 27-odd% compares to 18% in the quarter before. Apart from that, the commercial vehicle business has also been very strong. The trend this time, 23,000 units is what they sold. This compares to an average of around 11 to 16,000 units over the past 3 quarters. So the commercial vehicle business has also grown very well. Volume growth of almost 33-odd%. Realizations for the commercial vehicle business are also expected to go up by 6.5% year on year. So it's firing on both cylinders really, and that's the reason why I expect the revenues to grow 33% overall because of strong volume growth. The margins will also improve because of scale benefits for Royal Enfield. So overall, we are expecting 32% plus margins versus 31% same time last year. Profit growth of almost about 27-odd% is what we're expecting. Now remember, the stock is down about 10% from the highs of 33,480 that it hit in September 2017, and it ran up yesterday as well. So if these are good set of numbers, perhaps the stock could be on the upside. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, time to slip into a short break. Up next, all board members of Fortis Health, they respond